What's going on, ladies and gentlemen and beautiful people? This is Manny Quinones, one of the co-founders and developers of the new Sniper Pro strategy. And in this video, we're going to dive into what is Sniper Pro. So let's begin. Sniper Pro is a price action based reversal strategy that uses a unique scoring system to identify high probable reversal zones across all asset types and time frames. So whether the market is trending or ranging, Sniper Pro is going to help traders pinpoint precise entry opportunities with enhanced confidence and clarity. Now, who is Sniper Pro for? Sniper Pro was built for everyone. From complete beginners to experienced traders, it's designed to simplify the charts and help you see the markets much more clearly. So whether you're just learning or you are already trading full time, Sniper Pro will give you the tools to spot real-time opportunities and make better decisions with confidence. So let's break this down into the two classes, whether you are a novice or expert. So if you are a novice and this is your first time getting introduced to trading and you have only the basics under your belt, it's great to know that Sniper Pro will help you take out all of the guessing work. All of the indicators and the labels are color coded to show you exactly what's happening in the market. You simply have to learn the strategy steps to success so you can follow along even if you're just starting out. Now, if you are more on the experience side of trading, you understand the core elements and the concepts of the market, then Sniper Pro is going to help you take your setups to the next level, because you can use this as an overlay to confirm your analysis, catch cleaner entries, and quickly read the market conditions. And it will help you save a lot of time to stay focused on highly probable trades. Now, when can you use the new Sniper Pro? So Sniper Pro is built to perform in all market conditions, whether the market is trending or ranging. In the trending markets, as we begin to take a look, the system will help you trade with the direction of the trend, showing you very clear pullbacks and continuation zones. And if you're in ranging markets, it's going to highlight reversal opportunities at tops and bottoms of ranges with precision. So no matter what the market is doing, trending or ranging, Sniper Pro will adapt to give you the insight that you need to navigate the market with confidence. Now, what markets can you trade in? So Sniper Pro is designed to work in all markets across all major markets across the different asset classes. So whether you're trading Forex, gold, indices, cryptos, or stocks, the system will automatically adapt its key levels, its ranges, and its confirmations to suit each market type, making it a truly universal tool. So no matter what market you prefer, Sniper Pro will give you the structure and clarity that you need to trade confidently. And as you can see here on the screen, we have an example of the indices market, the NAS 100 on the 5-minute chart. We have gold on the 15-minute. We have Forex on the 1-hour chart, and we have crypto on the 4-hour chart. And it fires off beautifully. Now, what trading styles work best when using Sniper Pro? So it's fully optimized for any trading style. Whether you're in and out of the market quickly looking for those quick snipers, or if you're looking to hold positions for days, hours, or weeks, its smart design will allow the traders to analyze and react to market structure across multiple time frames, making it adaptable to your personal strategy and your schedule. So again, taking a look, whether you are hyper scalping and you're down on the 1 to 5 minute charts for fast-paced traders who want to capitalize on moves within minutes, Sniper Pro is there for you. If you are an intraday trader trading from the 15-minute to the 2-hour chart and you're looking to get in and out throughout the day or a trading session, Sniper Pro is equipped for you as well. And if you are more on the position side of swing trading, looking at the 4-hour time frame or greater, this can help give you the bigger picture to look at larger moves and hold them for longer periods of time. So how does Sniper Pro help you trade? Well, we have a built-in scoring system, dynamic support and resistance, trend direction, real-time insight. It's going to simplify your analysis so you can focus on making better decisions. So we want you to look for and identify highly probable reversals and give you the confirmations to be able to enter. So let's take a look at Sniper Pro at a glance. One, you're going to have a trend table. This trend table right over here is going to help cards. These scorecards are going to let you know when potential reversals may happen. 3, you will have key levels, which are these red and blue support and resistance levels based on psychological numbers. You will also have bar colors. The bar color will help you understand the current market flow and the immediate trend direction. Then we have our custom Sniperlator, which is our custom built oscillator showing you reversal points, entry points, and so much more, followed by our real-time divergence, which has never been done, and we have custom built a real-time divergence detector for reversals. So this is all built in for you at a glance. So I want to thank you guys so much for tuning in to this very first tutorial video of what is Sniper Pro. We're excited to have you on this journey, and we can't wait to see how you're going to apply this powerful system in your trading. So again, whether you're brand new or you're an experienced trader, Sniper Pro was built to simplify your decisions, boost your confidence, and remember, mastery comes with patience. So take your time, revisit this training when you need, and don't hesitate to reach out to your community or an educator for support. Let's continue to learn, grow, and trade smarter together. This is the new Sniper Pro. Thank you, everyone. What's going on, ladies and gentlemen? Welcome to the second tutorial video of Sniper Pro. My name is Manny Quinones, one of the co-founders and tool creators of Sniper Pro. In this tutorial video, we are going to cover the Sniper Pro system. So it's time to learn all about the indicators and the tools which makes the Sniper Pro system unique. Now, jumping right into it, let's take a look at the different features of Sniper Pro. The first thing that we want to take a look at is we want to take a look at the reversal bands for Sniper Pro. These are proprietary Bollinger reversal bands that we've created designed to anticipate future market movements. So when you're looking at the bands, the red band and the blue band, these are historically plotted. But as you take a look at these little lines over here, those lines will move around as the market is moving in real time. They will either contract or they will expand, okay, depending on the volatility and the movement in the market. So they will help you better understand the future movement of price. Now, when we take a look at these reversal bands, you have the inner red and blue line, which represents the first level of dynamic support and resistance. So when you see these first levels right over here, these are the very first levels of dynamic support and resistance where you can expect some type of price reaction and reversal. And then the thicker red and blue zones, they highlight key reversal areas where market shifts are more likely to occur. So the deeper that they go into the band, the stronger the possibility of the reversal and the snapback. And it's very important to understand that the sniper scores, which are these red and these blue cards over here, they will only trigger when price is inside of these Bollinger reversal bands. Now, the next key element of the Sniper Pro are the key levels. So you're going to have psychological key levels built into Sniper Pro. Alrighty, so they will be divided and they will also be highlighted. If price is above the if price is above the key level, the zone will be blue, so it visually looks like a support. And if price is below the zone will be red, so it looks dynamically like a resistance. So you will see, while not perfect, these psychological key levels, they do serve as great areas of support and resistance in the market where you can anticipate some price reaction. Now, the key levels will dynamically adjust. If you are on time frames below the 1 hour, they will start to break down in quarters and halves of quarters. And if you are in the 1 hour time frame and above, it will dynamically give you whole levels, right? So they're a little bit more spaced out, so you can trade appropriately depending on the time frame that you're on. Now, next, we also have the pivot points built in. Alrighty, so we have pivot points, which is based on the previous day's high, low, close. And it will give you a deviation to predict reversal levels. So if you see an R1, R2, R3, R4, or R5, this represents a daily resistance, while R1, 2, 3, while S 1, 2, 3, 4, 5 represents the daily support. Now, most of the time, the market stays within the support and resistance range, and sometimes when you have big volatile moves, it will blow past support or resistance number 5. But the key thing to do here is to use the pivot points with the key levels. So in this example on the chart, you want to see one of your key resistance or your key support levels be in alignment with the key zones. So if your pivot and your key zone is in alignment, this will help you to strengthen that key zone. Now, moving forward, we also have the trend screener. So the trend screener is a built-in tool which is going to just help you to instantly interpret the market behavior and understand the type of trend that the market is in based on several different factors. So you will be able to understand 3 concepts. One is the trend direction. All right, if price is above or below our long-term EMA, this will let you know if price is bullish or bearish. Then secondly, you have the trend state. This will help you understand if the market is bullish and trending, bullish and consolidating, or bullish and pulling back. So in this visual example, you can see that the market is bullish. It is above the long-term EMA. However, it is pulling back. And then from there, you have the trend strength. And this will determine the velocity of the trend, whether it's a very weak trend, a neutral trend, or a very strong trend. So in this example here, you can see that it's a bullish market above the long-term trend, but it clearly is pulling back. However, the trend is not very strong because it's not at peak highs, and it's not very weak because it's not close to the long-term EMA. So it's more in a neutral state, meaning that the market can continue trending up or it can continue pulling back down. Now, although you will not use the trend screener as an official confirmation for Sniper Pro, the trend screener and the combinations can help you identify what you want to do. As an example, if you want a trend setup, you can look for a neutral and trending or pulling back market. So here's a perfect example. This is a neutral bullish market that is pulling back. So it's very likely that you can continue to see the market continue to trend from here if you get a buy opportunity. You also have reversal setups. Reversals will be if the market is weak or very weak and pulling back, meaning that if this market is dropping all the way down very low to the long term, the trend is very weak and it's pulling back, you may have a reversal on your hand. Okay, and the opposite of reversal is an exhaustion setup, right? Which is, instead of it pulling all the way back and reversing, an exhaustion setup is when you are at the peak high of a trend. Imagine if you are at the peak high of a trending market and you're wondering, hey, is the market going to stop and reverse? Is this trend exhausted? So if you see a very strong market that is trending, that is bullish, the likelihood of that trend exhausting and turning around is pretty high and great, right? So this serves as a bonus that you can use, and the more that you use the trend screener, the better you will get. Next, we have the sniper later. So the sniper later is a wordplay using our sniper strategy and oscillator. So this is the sniper later. And this is an all-in-one high-performance momentum and reversal detection tool. And it's going to give you a few key elements, and this is completely built from the ground up. So first and foremost, you have reversal zones and retest zones. You will see the labels here which say bearish retest and bullish retest. So if the market is above the 50 line and has pulled back to this retest zone, that is showing you that the market is pulling back and likely retesting to go long. So the bullish and bearish retests will serve as the main areas where you are looking for the turning points on the sniper later. So if you want to trade from key highs and key lows, do your best to trade from these retest levels. Now there will also be extreme bear zones and extreme bull zones. So if you see the sniper later line come all the way down to this blue zone or come all the way up to that red zone, there is a very, very, very high probability that you will see an instantaneous reaction of the market changing direction because of how the code is set up. So they're very strong zones to pay attention to. And we also have a built-in Bollinger Band. So you want to make sure that you line up your Bollinger Bands with your bullish or your bearish retest zones. The next thing that you have are something called the crossover signals. So there are some crossovers that are built into the back end. So whenever you see these blue balls, right, this represents a bullish crossover. And when you see the red balls, they serve as a bearish crossover. So when you're trading with the sniper later and you're looking at a scorecard or you're looking at a rejection from a key zone and you see a blue or red ball, those will assist you with entries, letting you know that there may be some momentum shifts happening in the market. And then we also have our real-time divergence detector. So you will notice that this bullish and this bearish divergence detector will repaint a lot because it's not designed to show you previous divergence. It's designed to show you real-time divergence. And a simple way of understanding divergence is knowing when price and the oscillator is making opposite highs and opposite lows, right? So there's something funky going on in the market. So whenever you see real-time divergence in a key zone, in a Bollinger Band, with a scorecard and a crossover signal, okay, this is going to give you some really strong confirmations that this market may be turning over. And last but not least, we also have our trend direction bar, which is there is this center bar in the middle of the sniper later, which will show you blue bars and red bars. So this is a composite of 5 different indicators with 5 different settings. So the trend direction is not as responsive. It's a little bit slower. It's like a 1 to 2 bar delay because it's designed to be a stronger signal. So whenever you are in the market, if you're able to get a scorecard and a red bar, right, or a bullish scorecard and a blue bar line up at the same time, this is going to give you really, really, really good indication. And if you're in a bearish market and you're looking for a price decline, as long as this trend direction bar is red, you are on the safe side. Because when it switches to blue and red, it's a really powerful signal. And so make sure you're paying attention to that trend direction. direction bar. Now, the actual sniper scorecards is a very powerful feature, all right, designed to help you identify reversal entry candles. So it's not perfect, but it is designed to help you and is based on a couple of different things. First thing is you have the bar color. Okay, you will have blue and red bars based on volatility and also our custom EMA crossovers. Alrighty, so you want to see red bars and a red cloud in bearish market and blue bars and a blue cloud in these bullish markets. Then we have our sniper arrows, and our sniper arrows is another underlining sniper tool that will help you understand the current direction of the trend. So you want to make sure, you see here how you have red bars and blue arrows. That's not what you're looking for. You want to look for blue bars and blue arrows. That's where the magic is going to happen. Then we have our super sniper arrows. These are, custom super trend based indications with volume built in. So you will have volume data, and the higher the volume at the super sniper arrow, the more likely that you may see direction, the more likely you may see price move into that direction. So you want to look at those super sniper arrows and make sure that they are lining up with your sniper arrows and your bar color. And last but not least, in addition to all of this and some other, back-end scores, you will then get your trend score. And you will have a trend score ranging from +1, +2, and +3. The +1 is going to be the most common. +2 is a pretty good score. And if you see +3, that is over 8 different indicators at the same time, letting you know that this market is going to go in the direction that you're anticipating. So pay attention to those scorecards, and we're going to continuously increase the reliability and the confirmation for those scorecards. Alrighty. Now here is an ideal long and short setup using the Sniper Pro. On the left hand side we have an ideal long. We can see here that we have a key zone followed by price action, followed by our pivot level, right, while strengthening our support zone, followed by price inside of our blue price prediction Bollinger Bands, okay, followed by a scorecard with a blue candle breakout, and we also have price retesting with a crossover signal right here, right? So this is an ideal long. And then on this side, we have an ideal short. The only difference with this ideal short and this ideal long is that this one has the added benefit of real-time divergence, okay? So you can see we are in a key level with a pivot level with price action along with price inside of our price prediction Bollinger Bands, red candle, super sniper arrow, beautiful scorecard, and the market drops like a rock. So this is what we're looking for in these ideal Sniper Pros. So I want to thank you guys so much. This wraps up your full breakdown of the Sniper Pro toolkit. And just remember that every component you've seen in this video is built to work together, helping you guys to identify high probable reversal setups, confirm entries, and navigate the market with clarity and confidence. So now that you guys understand how to read and interpret the system, you guys are ready to start applying this strategy to your charts. Just remember to take your time, stay disciplined, and trust the tools that's at your fingertips. So let's trade smarter together, and I will see you in the next tutorial video where we walk you through an actual Sniper Pro setup, step by step with our 3 Sniper Pro setups. I'll see you then. Alrighty, what's going on, ladies and gentlemen? Welcome to this third and final tutorial on trading with Sniper Pro. My name is Manny Quinones, one of the co-founders and 2 creators of Sniper Pro. So let's jump into today's video tutorial training, which is trading with Sniper Pro. And in this particular training, this is going to be a step-by-step process of how to use the Sniper Pro system. We're going to combine all of the key elements of the price action on this amazing tool system over here. We're going to show you how to manage your entries and your exits, and also how to identify trade setups, confirm reversals, and so on and so forth. So let's dive right into it. Now with Sniper Pro, there are three main Sniper Pro setups. So this is the strategy behind the strategy. This is designed to optimize your entries on Sniper Pro using price action. So there are three main setups that we look at. The first setup is the side snipe, then we have the trend snipe, and then we have the reverse snipe. The side snipe is based on consolidating markets that move sideways from left to right. The trend snipe is focused on capitalizing and trading in the trending markets. And the reverse snipe is based on catching market reversals. And we're going to walk through all three of them today, both on here and in the live market. Now, let's take a look at the trade rules. So the trading rules for Sniper Pro are always the same. The only thing that's going to change is the first rule, which is the setup. That's the very first rule, which is to identify the setup you will trade. Is it going to be a side snipe? Is it going to be a trend snipe? Or is it going to be a reverse snipe? It's going to be one of those three. Once you confirm the setup, you then get to move into step 2, which is identifying the zone. Step 3, confirming with the sniper later. Step 4, looking for the reversal candle, which is the scorecard. And step 5, setting up the proper risk to reward. So let's jump on to the first rule, which is the setup. So there are three setups. The first setup is the side snipe, and the side snipe is considered an easy setup. That's based on three market conditions. The first market condition is looking for a consolidating market. You have to be able to identify a sideways moving market in any direction, and the consolidation can be small or it can be large. Now, once you've identified a consolidating market, you want to move to condition 2, which is trading only the extreme high and the extreme low of the consolidation. These are going to become the best zones for reaction, because instead of using support and resistance, we will be using supply and demand. Alrighty, so once you've identified the consolidating market, you want to look for the extreme high and the extreme low. Once you've identified that, you move to the third condition, which is to keep in mind double, triple tops and bottoms, simply meaning that you're only looking for the second or the third hit of the extreme high or of the extreme low. That is it. You're not looking for 3, 4, 5 hits, because that does not strengthen the support and resistance. That actually weakens it. So we're only looking for 2 to 3 hits. So this is a very simple setup. It's easy, and it's called the side snipe. Now moving on to the next setup, which is the trend snipe. The trend snipe requires a little bit more trading education, and this is an intermediate setup over here. Now the trend snipe has three different conditions as well. The first condition you want to look at is the market structure. You want to be able to identify a previous break of structure in the direction of the trend. If the market is trending up, you want to make sure that there was a previous bullish break of structure, as you see in the example here. Now, once you've identified that break of structure, we know that the market is going to pull back to look for a level of support. So the second thing that you're looking for, the second condition, is either or can be combined. The second condition is using a trend line. So you may take 2 points and draw out a trend line. And if you see the market pulling back to a trend line, you have a potential trend snipe trading in the direction of the trend. Now, the third condition here is using the moving averages. You will notice on Sniper Pro, we have 3 different moving averages. We have the short-term moving average, which turns between blue and red and is floating in between the Bollinger Bands. The midterm moving average is going to be a purple line, and the long-term moving average is going to be a black line. So you can have the market pull back to any one of these lines. Now, if you have all 3 combinations together of a break of structure while the market is pulling back to a trend line and giving you a moving average bounce, that is a very powerful confirmation for a trend snipe because the price action is just right. Now from there, let's go to the third setup, which is the most advanced setup, and this is the reverse snipe. The reverse snipe is for the more price action based traders, the individuals that are looking to, when the Sniper Pro looks like it's making no sense, when the market looks like it's making no sense, what may be happening is you may be within a reversal. So we want to be able to catch those reverse snipes, which will give us big moves in the opposite direction. So this is very simple. This is also a 3 condition rule. Condition number 1 is looking for the break of structure in the direction of the trend, much like the trend line. You want to look for the break of structure in the direction of the trend. Now, once you see that, you want to move to the second condition, and the second condition is an immediate change of character, or what we call a choke, right? Which is the change of character. This is where the market is now breaking the low in one single sweep. Whenever you see that, this is usually means that a reversal is imminent in the market, whether short term or long term. So again, condition 1, you want to see the break of structure in the direction of the market. Condition 2, you want to see the choke, which is the breakout in the opposite direction of the market as seen on the screen. And now condition number 3 is the market simply pulling back or retesting any previous level of support and resistance, as you see right here on the screen. That resistance, that pullback retest resistance, was in the middle of the range, but it was a valid resistance. And you can see there that the price came up to that resistance into the clouds and rejected from that clouds, giving you a beautiful move to the downside. So if you follow this sequence, you will also be able to capitalize on reverse snipes. So these are the 3 setups: the side snipe, the trend snipe, and the reverse snipe. Now, no matter which one of those market conditions that you have quickly identified, now we go into rule number 2, or step number 2. And this remains the same no matter what. So once you have a side snipe or a trend snipe or reverse snipe, the next thing that we want to validate now is the zone. And the zone is 50% of the work. So to validate the zone, we're going to use 3 key elements. The first key element is we want to make sure that we are looking for price rejection off of the key level while inside of the Bollinger Band, as you see on the screen. Okay, you want to make sure that if you're going to look for a long or a buy, you want to make sure that you are in a blue key level while in the blue Bollinger Band. If you're looking for a short, you want to be in the red key level above in the red Bollinger Band. So you want to make sure you're at a key level. The second thing that you want to do to validate that key level is to look for the pivot level. On the right-hand side, you're going to have 5 reversal pivots and 5 support pivots. You want to make sure that that pivot lines up with your key level as close as possible, because it's several different confirmations tied together, and it really strengthens the key level. And the third thing, to put the cherry on top, is to simply look back at previous price and see if price has reacted at that key level. That key level could have been a previous support or a resistance. It does not matter. But if price has reacted from that key level, that right there is validating the key level. And these three elements together will triple your support and your resistance strength, making it a very valid zone you can expect a price reaction from. Very simple, very powerful. Now from there we go into rule number 3, which is actually using the Sniperlator. Now this is all about, really looking at the sentiment of the market. Now on the Sniperlator, we have a few different confirmations. You can get one or the other, or you can get all of them at the same time, just depending on the market condition. So there's a few things that you want to look at. The first thing that you want to look at is the rejection levels and bands. On the Sniperlator, you're going to have 2 buy zones, 2 buy levels, and you're going to have 2 short levels followed by a band in there. So if you are at a blue support level, a blue key level, and then you look at your Sniperlator, and your Sniperlator is also at a blue support level, on the Sniperlator, you have double support going on. One on the chart, one on the Sniperlator. The second thing that you're looking for now is line colors and the divergence. So you will notice that the Sniperlator changes between blue and red. It will turn red if it hits the top bands, and it will turn blue if it hits the bottom bands. So if you're looking for better shorts, then you want to make sure that your line is solid red. If you want to look for better longs, you want to make sure that your line is solid blue. Now, the other thing is we also have real-time divergence built in. So you're going to notice that our divergence works in real time, candle by candle by candle, and the Sniperlator will only give you the 2 most recent divergence. So if you happen to see a D above or below wherever you're looking to enter in the market, that's going to let you know that there is some divergence that is built in, and divergence is a really powerful tool. So don't rely on it, but if it's there confirming your setup, that is really powerful. Now, the third condition here are the fish hooks and the crossovers. So you will notice that whenever the market, if you take a look at the Sniperlator now at the bottom, right, it's making 2 peak lows. You will notice whenever the Sniperlator starts to break out of the bands at the top or the bottom, it's going to start to shade it blue. Those blue shades or those red shades are known as fish hooks. And usually when you get a fish hook, which is a breakout, you are looking for a break-in. And the break-in will give you the crossovers. So you will notice there are going to be little red balls and little blue balls, and those are crossovers. Those are crossovers of the bands and crossovers of RSI price levels, like price crossing above the 80, or price crossing above the 60, or price crossing back below the band. Those are crossovers. They're meant to help you validate the trade, showing you that the price will be moving into your direction. And last but not least, on there is the trend direction, which is one of my favorite tools besides the divergence, is the trend direction. Right in the middle of the Sniperlator, you'll see that black label that says trend direction, and it will be blue and red bars. So that is designed to work a little bit slower than the actual Sniperlator. So if you end up getting the if you end up getting a blue bar on the Sniperlator and you're looking for a blue scorecard on the Sniper Pro, and they're both lining up, that's a really powerful confirmation. Alrighty, so again, looking at the Sniperlator, you ideally want to make sure that your buys are at your lows or at your highs. You want to look for the line color and some divergence. You want to make sure that you get those crossover, those little crossover dots, which are going to help you confirm the entry, and make sure you're always taking a look at your trend direction bars in the middle. They will help you greatly, making sure you're at the right place at the right time, catching the right momentum. Now from there, we have the scorecard. Alrighty. So the scorecard, again, is essentially us identifying the reversal candle. So you have to remember the scorecard is about all of the indicators lining up at the same place at the same time, giving you the same confirmation that the market is ready to move. And the higher the score, the more probable the move. So we have adjusted it based on our recent tutorials. The scores now start at a +3 score. So a +3 would be the weakest score, letting you know that there are a minimum of 3 different indications that the market is going to move. The highest score that you can ever see on there is going to be a +10. If you see a +10 score, that means that you have all 10 indicator confirmations, including divergence, including the crossover, including engulfing candles, including FVGs, including MA crossovers, including every other secret component that we have behind the Sniper Pro. It's all built in and baked in together right there. So the higher the score, the stronger the movement may be. Alrighty? So remember, when you see the scorecard is going to give you the trend strength, and that is what we would consider the reversal candle. Okay? Now, in addition to that, remember you have the bar and the cloud color. So whenever you are looking at the trade, you want to either look for a gray transition candle. That's a gray candle that breaks above both of the short-term moving averages, or you want to see a blue bar. Okay? If you're going to enter a long, you never enter a long on a red candle or a gray candle while the cloud is gray. You only want to enter on a scorecard. Okay, if it's giving you a scorecard, that's a gray card giving you the crossover of both moving averages. That's called a transition candle. Or you want the candle to be blue. Alrighty? Now, from there, the third condition that you want to look for is ideally also look for the super sniper arrows. If you get a super sniper arrow with high volume, right, the higher the volume, the better that it is. So we have the volume set at 33%. You can sometimes see it at 50, 70, or 90. So you want to look for high volume sniper arrows. The next condition that you can look for is also the moving average crossovers. So remember, we have the long term, the mid-term, and the short term. The market can bounce off the long term and cross over the midterm. It can bounce over the midterm and cross over the short term. It can cross over just the short term, and then you can get the cloud color change, right? Which is the immediate trend or the immediate moving averages that are within there. So you want to look for those moving average crossovers as well. They will help you trade in the right direction or in the opposite direction on the breakouts. And then the last thing that you're looking at is the FVG entry box. So once you see a scorecard, that blue box, you have two options here. Option number one is once the scorecard closes, you could immediately enter at the close of the candle. All right, that's going to reduce your risk to reward, but you can do that if you fear not catching the momentum of the market. Okay, but remember, that means a bigger risk for you as well. Now, the other option that you could do as well, if you're looking to confirm the market a little bit more, is simply allow, once the scorecard prints and you have an FVG box or an entry box plotted, you can simply look for the market to pull back and wick that entry box. And if it wicks or enters that entry box, you can use that to have better risk to reward. The other thing that you can do is also draw up the entry box and then jump down to a lower time frame and then look for another entry candle in there as well. Alrighty, so these are a few things. You will also have gold candles that are going to be on here. And those gold candles will give you some additional confirmations, which we're going to take a look at in just a couple of minutes. So this is what you need to know about the scorecard. And then last but not least is the risk to reward. So as we said, you can enter at the pullback of that entry box, and your stop loss level is going to vary based on the asset and based on the time frame. So if you're trading on the 1 minute for gold, NAS, US 30, anything like that, you will have a smaller stop loss and a smaller TP. If you are trading on the 5 minute to the 15 minute, you will have a larger stop loss. If you're trading on the 1 hour, your stop loss will be bigger. If you're trading on the 4 hour, your stop loss will be even bigger, because we are now trading based on the time frame, right? The bigger the time frame, the bigger the move. So you have bigger stop loss levels and bigger take profit levels. But the most important thing to consider is that gold indices all are based on 1 to 2 risk to rewards, while Forex pairs and yen pairs are based on 1 to 3 risk to rewards. And we will walk through that in just a moment. So the red stop loss line is going to always be above a certain distance above the entry box. Now, it's very important to understand that this entry box also counts as like a momentum box, meaning that if you get a price score, right, you get a scorecard and this prints the box, even though the stop loss is above the box, most of the time, if the price breaks out of the box in the opposite direction, it's going to be an invalid trade. We have the stop loss to give some breathing room that is there. But this is a strong reversal based strategy with very, very specific indicators. So once you get that scorecard, you usually, as an example here, you want price to stay below or above the score box to be above the entry box to be considered valid. Now for the TPs, you're going to have 2 TP levels that are going to be baked in, or you can also use the key zone to trade from zone to zone. And we will look at that in the live market. Now, a good tip that I usually give individuals is partials and trailing stops. So whenever you are holding a trade on the Sniper Pro, it's always a good practice to take roughly 50% partials at the 1-to-1 TP, which is TP1, and then move your stop loss to, then move your entry to the next TP and move your stop loss to the entry. So that way you now have a risk-free idea and you could potentially swing it to the next target. So very, very important to keep these things in mind. Alrighty. And with that being said, we're going to get ready to wrap up Sniper Pro. I want to thank you guys so much for being here and completing this learning how to trade with Sniper Pro. So that way you know how to follow the entry rules, identify the setups, manage your stop losses, and your take profits as well. So we're going to get ready to conclude this. We will have a bonus tutorial. Take a look at it next. And in that bonus tutorial, we will actually take a look at Sniper Pro in the live market using these methodologies and tactics. So that way you can better see how we use it and how it feels in real time. Again, my name is Manny Q. Thank you guys so much for tuning in, and we look forward to seeing you on the live sessions. Alrighty, what's going on, ladies and gentlemen? I want to welcome everybody to this bonus training tutorial on how to trade and use the Sniper Pro strategy system. Here we will be diving into the live markets on various time frames so we can show you how to apply the indicators and confirm the setups using Sniper Pro based on the previous 3 tutorials that we had. So we're going to take a look at a few different pairs, a few different time frames, and let's just jump into it. Now, first off, let's take a look at this gold market. I'm currently on the 5-minute time frame on gold. Now, what you'll notice is the first thing that you're going to notice is whenever we are using the Sniper Pro, the first thing that you're going to see is you are going to see the two most recent scores. Alrighty, the most recent score is going to be the active idea, which is going to have the built-in stop loss with the label, and then the built-in TPs. And as we said, every single pair, every single asset is going to have two take profit levels. The only difference is gold, BTC, US30, NAS, SPX, the indices, the cryptos, the commodities, they will all be set on a 1 to 2 risk to reward. So the entry point gets developed from 50% of the entry box. You can go right to the line. You see this is about 100 pip stop loss, while TP2 is a 200 pip move, whereas TP1 is a 100 pip move. So TP1 on gold, on Bitcoin, US30, NAS, SPX is going to be a 1-to-1. TP2 is going to make them a 1-to-2. The only difference here is if we're trading different pairs, like looking at GBP AUD or any of the yen pairs or the Forex pairs, these are all going to be 1 to 3 risk to rewards. Meaning that we grab the entry from 50% of the zone. It's roughly around 15 pips, with TP1 being about 22, 23 pips, and TP2 being 45 pips, right? Making that a 1, 2, 3. All right. So every single asset will have two different targets. The only difference is that yen pairs and Forex pairs are going to be a 1 to 1.5 and a 1 to 3. Since they move a little bit slower, we wanted to create, higher probabilities of profitability using, using this entry and this exit system right over here. And keep in mind that if we begin to change time frames to a smaller time frame, the TP and the stop loss will get cut in half. If it goes to a 1 hour time frame, the stop loss and the TP will double. And if it goes to the 4 hour time frame, the stop loss and the TP will triple. Since it's a higher time frame and we're going to catch bigger moves, we have a bigger stop loss and bigger TPs. If we're on a smaller time frame, we're catching smaller moves, so we're going to have smaller stop losses and smaller TPs. But the risk to reward will always remain the same. Very important to note. Now, let's take a look at a couple of different things over here. So let's take a look at this gold, right? If we take a look at this gold, could we confirm this +3 score on this gold? So there's a few things to consider when it comes to this +3. One, we had a super sniper arrow. This is around 50%, and it's also not lining up with our scorecard. So that right there, we don't like, right? We want to try to have the super sniper arrow with the scorecard. That's one. Two, we do see that it's coming off of the key level, and it's a valid key level. However, our key level is not overlapping with any of our support. So that's very, very important, okay? If you want to have that triple trend strength, that triple support and resistance strength, you want to do your best to line up these pivot levels with those support levels. Now, let's take a look over here, right? Maybe let's go back a couple of candles over here. Let's take a look here at this particular setup, this +6 setup. So the 4 rules, right? The 4 rules to trading with Sniper Pro is step 1 is to identify the setup. So that's the first thing we always want to ask ourselves. What is the setup? And the first thing that I'm asking myself is this a side snipe? Is this a trend snipe? Or is this a reverse snipe? What is it? Right? So if I look at the market here, this is more of an advanced setup where we have a break to the upside, condition 1, a break to the downside, condition 2, and then we are looking for a pullback to key support and resistance levels. So this here is actually a reversal snipe. Alrighty, so this is a reversal snipe setup. Now, if I come a little closer, let's take a look. I can see here, one, that we are at a key level. I can see here, two, that we've had some price rejection from the key level here. It broke above and held. I can see here it broke below and held, right? So we have some validation, not clean, but we do have some validation of the key level. Another thing that I notice over here is that this market is making like a counter trend. And you could also see here that this market is breaking out of that counter trend. See how we have that gray transition candle giving you the breakout? So these are other small factors and things that you can use, right? Using it with price action. So once the transition candle plotted a score, and this is a +6 score, so that's a really good score. It's a +6 score. We have two options. Again, option one is going to be to enter right where the candle closes. Now, in what event would you enter on the candle close? You could enter on the candle close if the candle close is very, very close to the entry box, okay, because sometimes you just will not get the pullback. Another reason you can enter on candle close is if you do not have an FVG, okay? So you see here, we have an FVG. Okay, so since we have the FVG, we're more than likely to get a pullback to the entry box, right? Which is going to, juicing up our risk to reward. So keep that in mind, and we will take a look at a few other examples. So let's say I want to come right to the entry box. We can come to 50% of the entry box or the bottom of the entry box. That's where we can set it, okay? Now, from here, we want to put our stops right at the stop loss line. So you have to remember, you have to give the market room to breathe. But please remember, the way that the Sniper Pro is set up is that this entry box is technically a momentum box. So this one candle with this score is letting you know that the market should be moving down from this candle. Right? It should not break above the box, and then go below the box, then retest the box, then come down. Then it should not do any of that. Okay, this is a very specific indicator. It's a very specific tool. So we want price to stay below the entry box. Alrighty? The stop loss is just giving the trade some room to breathe. If you start to see the market come above the entry box, right, and getting some small candles, this is usually invalidating the trade. So what you can do here is you could do one of two things. The first thing that you could do is wait for the market to come back to the entry box and then give you another confirmation to short down. All right, giving you a double confirmation. A double confirmation here is you can get this super sniper. Okay, if you see a super sniper arrow rejecting from that box, that is great, especially with high volume. You want to make sure that, again, your arrows, you have red arrows coming down, and you want to make sure that your bar color is red. And then do not forget that you have the long-term moving average, the midterm, and the short-term. Okay? Crossovers of the short-term or crossovers of the short-term and the midterm serve as great additional entry confirmations. So you can see that although this did not cross over, even though we got a +6 score, this did not cross over the short term and the long term. But as the market pulled back into the entry box, right when the market was ready to move, we had a super sniper arrow, a red candle, red cloud, and a crossover of the short term and the long term right there, giving you a super powerful confirmation to confirm that market move to the downside. Now, the other thing that you can do, okay, which is another really good idea, is if you are more of a super confirmation based trader, what you can do is you can do this. You can take the entry box and then you can manually mark up the entry box and then jump down to a lower time frame like a 1 minute or a 3 minute. right? Or just whatever time frame you're on, jump down to a lower time frame. Okay, so manually mark up that entry box, jump down to a lower time frame, and then on that lower time frame there, you want to see if you get a lower time frame reaction from that entry box. Now give me just one moment, because sometimes if I move the market too much, the indicator will freeze. So let's take a look at how the market reacts right over here. Okay, so I have a runtime error. Not too sure. Maybe we could do this on another pair, but we're not supposed to have any runtime issues. So let's try one more time. If not, we will move forward. There we go. So here is the other confirmation that you can have. The other confirmation is go to the lower time frame and then just do another quick sneak peek, right? You look at the entry box. You make sure that that entry box is at your pivot levels. You are at some of these resistance zones. You can look for a gray candle. That's a golden candle to take it to the downside. All right, so you will see sometimes we build in these gold candles, which are designed to help you see price shifts in the market. So you can look for that gold candle rejecting, or you can simply just wait for the market to come back in, right? Go back into the band, give you the red candle, give you the red arrow, give you the moving average crossover. That's another way where you can double confirm your Sniper Pro analysis by jumping down to the lower time frame. Okay, now let's take a look at a few other pairs. Let's try to go to BTC. So you will notice that this works on all different assets, right? So let's see what BTC has over here. All right, let's take a look at BTC. Now BTC had a nice move over here. And again, the first thing that we want to do is we want to kind of identify the setup. So we can see that this is a sideways moving market. So ideally, I would only want to trade the extreme high or this extreme low for the side snipe, right? That's what we're looking for the side snipes. But let's take another look here. Okay, first thing that we want to do is we want to validate our key zone, right? Is our key zone validated? Do we have lots of price rejection from that area? And we do. Okay, you can see we have a big move over here. You see we had another price rejection over here. And then now we can zoom in. Now, the only issue, again, with this is although we are getting a move to the previous high of the zone, right, we don't have a pivot level. So we have the key zone, we have price action, but we don't have the pivot level, right? So we want to have those pivot levels there. Now, again, if I open up the Sniper later, okay, if I open up the Sniper later, I want to look at some additional confirmations. So let's take a look. So I have a +4 scorecard, and look at what I have right over here, right? I have a divergence marker coming here, letting us know that we have divergence setting up there, which is giving us a stronger move to sell. Okay, we are trading off of the bands from our bearish retest level, which is great. We have a red crossover dot right over here, which is phenomenal. And in addition to that, our red trend direction, our trend direction has a red bar, right? Which is a very powerful confirmation down there as well with a +4. So this is giving me some pretty good readings to take that market to the downside. And again, now I do the same thing. I can enter on candle close or anywhere from the pullback within the box. I put my stops there. I have my target 1, and then I also have my target 2. And this is how I'm able to manage my risk to reward. Now, one more thing. Again, as I said, whenever you are getting into the market, you can twin trade, meaning that let's say you're taking a 1% risk per trade. Okay, you can do 2.5s. You could do 2.5s. You can cut that risk in half. You could enter one and take it to TP1, and then you could take the second one and take it down to TP2 if it makes it a little bit more manageable for you. So this is called twin trading. So whatever lot size you're going to put, cut the lot size in half, take two positions, set one at TP1 and set the other at TP2. So you can twin trade Sniper Pro. Now, if you're only putting in one position, I always recommend shooting for TP1 first. Alrighty, and then as price gets close to TP1, right over there, you can then adjust your stop loss to your entry to make it a break-even trade, and then take your TP1 and move it to TP2. And that's phenomenal. Now, if it starts going all the way down to TP2, you now take your stop loss and you move your stop loss to TP1, and then you move your TP to TP2. If it keeps going past TP2 and you want to keep riding it down, you move it further to the next key zone, and then you adjust your stop loss and you move your stop loss to TP2. Alrighty. So this is a really good way to manage your trade and stick to proper risk to reward and risk per trade. If you are a serious trader and you're really counting those pips and you're counting those percentages on your accounts. Okay. We could take a look at a few other pairs here really quickly before we get ready to wrap this up. Let's look at a few other ideas. So here's NAS 100. Let's see if we have anything here on NAS 100. So NAS 100, we don't really have anything here on NAS over here. Let's see if maybe we have a little bit of a... Okay, look. So let me see. Actually, look, NAS did. NAS gave us a long down here. Now, again, if you look at this, how can you confirm this? Well, you have to consider, well, where is my market? Right? Where is my market? Is it a side snipe, trend snipe, reversal snipe? Okay, so we don't really have any previous support over here. So since we don't really have any previous support, we don't have a side snipe. And since we're not trading in the direction of the market and we don't have a trend line bounce or, right? I mean, we might have a small trend line bounce. Okay, let me see. No, we don't have any, well, we got a small trend line bounce actually. Right over here. Okay, that's not too bad. We have a small trend line bounce, but that trend line is in the opposite direction of the moving average. So anytime we are trading Sniper Pro, we usually want to take, we want to trade in the direction of the long-term EMA. So we want to look for shorts. That's why this will tell us that it's a bearish market if it's under the long term or if it's a bullish market. Right? So right now we see that this is a bearish market. Right? So you are counter trend trading. So, if you feel confident and if you feel good, then, you can go for it. But just make sure you confirm your conditions. All right? So what I see here is that we have a key zone. We have some support on the 5-minute over here. Some price action support. We don't have any any pivot levels here in the middle. We do have some divergence, a +5 score, but look at how your moving averages are right above, right? So you might end up running into some trouble with this idea. And all right, here we are in real time. So in real time, it actually worked out. It wasn't too bad. Okay, hit TP1, which is actually really phenomenal. Okay, and this is why it's good to be on the reserved side. But you had that TP1. That TP1 got smashed. You have your 100 pips on NAS. And believe it or not, you actually have a gold candle now. You have that beautiful golden candle with the Super Sniper arrow to the upside, rejecting right out of your zone. So this is giving you another confirmation. So we might actually continue to see some really nice price rejection on NAS 100 to the upside, right? But again, this is what we do. We want to trade the setups. So let's see. So this over here, same exact thing. We're kind of in a choppy market over here. This is, you have a key level here. Your support is here. I'm not a fan, although this market is moving beautifully. You have your blue sniper line. Your trend direction is blue. You have a blue candle back in the zone. Market's almost at TP1. You'll see the price points are also on the label. So it does look good. But again, if you're more on the newer side and you really want to optimize it, you want to look for the side snipe setup, the reversal snipe setup, or the trend snipe setup, and then validate your zone. So here we have no zone validation. It happens to be a good idea, which is moving, but there's no zone validation. Okay. And then now if we go over to some pairs, you have GU, you have EU, you have all of these other pairs, all of these other markets that are over here. So let's take a look at maybe two more pairs and we'll get out of here. Okay. We can see here that this had an actual entry on EU. Let's actually go back. Okay, let's go back. And you'll see sometimes the signals reset. But let's go back. Let's take a look. Let's see what we got. So look at here. Okay, from this low, this was a beautiful low coming right off that key zone in the band. You ended up getting a blue scorecard right after the golden arrow, after the golden candle, which is nice, especially if the golden candle and the blue scorecard line up at the same time. That's another powerful confirmation. And clearly we can see from here that that market went up a good 25, 30 pips executing TP. And then here we are here with a potential side snipe. So we have a consolidation based market. Okay, we are at the high of the zone. We are in between our pivot levels, and mainly this is the pivot level right here. But you can see quite beautifully, we had market price action here. We had price action here. We have price action here with the pivot zone. We have a 5 scorecard. We have some real-time divergence and that crossover. And if you take a look, we actually have a red bar there as well. Okay, so that ended up looking like a really nice idea. So let's take a look. Let's just go back. Let's take a look over here. Okay, we are in that zone. Put that entry right there in that zone. Put that stop loss. Put TP1 or TP2. We always go to TP1 first. Market pulled back into the zone. Candles are turning back over. And boom. Ended up giving you a really, really, really nice run. Now you see once a new score triggers, you see how it erased the old score. So that does happen. All right. So it's only going to show you the most recent score. So just please keep that in mind. It's only going to show you the most recent score. If this, and this was another one, look, this one just hit, oh no, we're getting close to TP1. Where are we at in real time? Okay, no, but it moved very close to TP1, which was nice. And then just remember, if you are trading pairs like the odds or the yens, these pairs are a little bit more volatile. So again, if you want to stay on the safe side, just be sure that you are using the setups. See if your key zone is at a previous level of support, trading off of one of those pivot levels. You want to look for a beautiful scorecard, followed by blue line crossovers. Look for some blue trends. Wait for the market to pull back and take off. This one actually ended up hitting both TP1 and 2 for 45 pips, making it a 1, 2, 3. Alrighty. And so, I mean, that's pretty much that. Now, let's go to, again, if you go to the 1 hour or the 4 hour, or you are trading on higher time frames, again, the higher time frames are going to change these scores. Let me see if we have a higher time frame trade over here. Nothing here. These are, let's try to look at some yens. Yens are a little bit more volatile. Yens are like miniature indices. They move nice and quick. Alrighty, so here's an example. Here is GBP, JPY on a 1 hour charts. Okay, coming right into this key level. Nice little fish hook, +5 score, moving to the upside. And you're going to notice here, see how this actually closed at TP1? That's not good, so you can't really enter there. So you want to actually get a pullback. And unfortunately, this did not give you a pullback. But that momentum kept riding for about 80 pips. And we see here the market did pull back now. Very close to that range. But unfortunately, no cigar. However, what you will notice is, let's take a look. The stop loss here is set to 30. TP1 is set to 45. And TP2 is set to 90 pips. Because it is tripled from the 5-minute and 15-minute time frame. Okay, now mostly people trade this on the 15-minute and the 1 hour. They're both really good time frames, and then the 1 minute is very satisfying as well, especially if you're trading some volatile pairs. So just make sure that you are taking a good look at the market. Okay, now if you don't see anything in the market, it will only give you a signal within the last 50 candles. Okay. So unfortunately on GFood Live 2, you cannot replay it, but you will see that it does work very well on the 1 minute. You have a +6 score sitting right over here. Resistance 2, good level of support, plus divergence. Market came back in and took off on the 1 minute, giving you 30 pips. Okay. So phenomenal indicator and phenomenal tool. Just remember, if you see these golden candles, they serve as additional entry confirmations. You can trade them independently. If you do not get a scorecard, you can trade the super sniper arrows independently. If you do not get a scorecard, you can trade the crossovers and the bounces of the moving averages if you do not get a scorecard. Okay. And if you get a golden candle with a scorecard, that is a great combination. So these are the things that you really want to pay attention to and look out for. All right. Now, guys, look, with that being said, we're going to wrap up this tutorial. I hope this tutorial was helpful for you guys. There are so many amazing moves that this strategy is capturing. So I look forward to sniping the market with you. And be sure to check out on the English side, Mr. John Oliver. He will have a boot camp, and he is one of the master educators behind Sniper Pro and the code developer with this too. So be sure to check out John Oliver on his live sessions, and any other English or any other educators in any language that is trading with Sniper Pro. It's a phenomenal tool. So thank you so much, and we will see you guys in the next training.